Hello. Welcome to the Forex IR channel. I introduce the latest strategies and indicators in this channel. Look carefully at the instructional tips in the video. I try to help you for more and a long profit in the financial markets. Please subscribe to the channel and send me your comments. Let's go. Hello, good day. Today I want to tell you how to draw a trend line and how to use it. Please stay with me until the end of the video. Please subscribe to the channel before starting. Thanks. You know, support and resistance are horizontal areas on your chart that shows potential. Buying, selling pressure. And it's the same for trend line. The only difference is, a trend line isn't horizontal but sloping. Here's a trend line example. So here's my definition of it. Upward trend line, sloping area on the chart that shows upward buying pressure. Downward trend line, sloping area on the chart that shows downward selling pressure. Now, before I dive into specific trend line strategies and techniques, you must first learn how to draw a trend line correctly. And that's what I'll cover next. How do you know which trend lines are important, and which to ignore? You've no idea. So listen carefully. 1. Focus only on the major swing points and ignore everything else. 2. Connect at least 2 major swing points. 3. Adjust it so that you get the most number of touches, whether it's body or wick. Pro tip. You can draw 2 parallel trend lines to define the area on your chart. Here's an example. Now, unlike support and resistance where you can just draw once and leave it, trend line needs. This happens when the price breaks the trend line and then recovers, and you need to adjust the trend line to fit the recent price action. You'll learn how trend lines can improve your trading results. All you need to do is draw your trend line and ask yourself, is the trend line pointing higher or lower? If it's higher, then the market is in an uptrend, and vice versa. But that's not all. Because a trend line can also alert you when market conditions are changing. How? By paying attention to the steepness of the trend line. If your trend line is getting flatter, it means the market is moving into a range condition. And if your trend line is getting steeper, it means the trend is becoming stronger, or possibly going into a buying climax. Is this important? Heck yes. Because if you know market conditions are changing, you can adjust your trading strategy accordingly. And not use the same trick for all market conditions, which is a recipe for disaster. If you want to find good trading opportunities, then you must trade near the trend line. This allows you to have a tighter stop loss on your trades, which improves your risk to reward. But that's not all. Because if you combine trend line with support and resistance, That's where you find the best trading opportunities. Here's what I mean. Now you might wonder, so when do I enter a trade? Well, you can use reversal candlestick patterns like the hammer, bullish engulfing, etc. as your entry trigger. Here's the deal. It can be difficult to time your entries in a trending market because the pullback can be deep or shallow. I'll explain. If the pullback is deep and you enter your trades too early, you have to suffer a lot of pain. But if the pullback is shallow and you enter your trades too late, you risk missing the move. So, what's the solution? Introducing the trendline breakout technique. Here's how it works. 1. Wait for a pullback in an uptrend. 2. Draw a trend line connecting the highs of the pullback. 3. If the price breaks the trend line, then enter the trade. Here's the logic behind it. If the price breaks above the trend line, it tells you the buyers are in control and the trend is likely to resume. If it doesn't, then it means the sellers are still in control and you want to stay on the sidelines till the buyers regained control. Does it make sense? Has this ever happened to you? You see the price break above the downward trend line and you think to yourself, the market is about to reverse higher because the trend line is broken. The next thing you know, the market heads lower, and the downtrend resumes itself. What's going on? Well, here's the deal. Just because a trend line breaks doesn't mean the trend is over. Recall, you've learned that a trend line needs regular adjustment as the market tends to have such a false breakdown. So the question is, how do you identify a trend reversal to the upside? Well, here's a 3-step technique you can use. 1. Wait for the price to break above the trend line. 2. Wait for a higher low to form. This tells you the sellers have exhausted themselves. 3. If the price breaks the swing high, the market is likely to reverse higher. The buyers are now in control. When you draw a trend line, 1. Focus on the major swing points. 2. Connect the major swing points. 3. Adjust the trend line and get as many touches as possible. The steepness of a trend line gives you clues about the market condition so you can adjust your trading strategy accordingly. The trend line breakout technique helps you time your entry in a trending market. You can use a trend line to trail your stop loss and ride massive trends. If a trend line breaks, wait for the retest and see if it holds. If it does, the market is likely to reverse in the opposite direction. I hope you like this tutorial. Please like the video and subscribe the channel. Goodbye.